If you've ever felt confused whether you should be looking for longs or shorts when you sit down to trade, it's because you don't understand how to properly identify daily bias. Most traders wake up, look at their charts, and have no clue what direction the market wants to move. They end up taking random trades, they fight the trend, and that's why they lose money consistently. In this video, I'm going to show you my exact 3-step process for identifying daily bias in under 15 minutes. The same process that has helped me make over $700,000 in the last couple years of my career. Now, if you follow my content, you guys know that I focus heavily on the psychology side of trading. But the number one question I actually get is, Justin, how do you get so clear on market direction every morning? Instead of staring at the charts for hours trying to figure out what the market wants to do, you'll have a crystal clear directional bias before you even think about taking a trade. This isn't about predicting the market. It's about becoming an observer for what the market is already telling you. You'll never waste hours on analysis again. Now, before we get into it, I want to let you guys know too, I was not always like this whatsoever. When I first started trading, my first year to 2 years, I would pretty much spend like 12 hours a day on the charts, most of the time taking trades that were not high probability, and I would try to figure out what the market was doing 24/7. And what I realized later on in my trading is that you do not need to know what the market is doing 24/7 for you to make money. And a lot of the times, one of the things that I see new traders have a problem with is that you think that you're doing something wrong or you're lacking information if you don't understand what the market's doing 24/7. And in reality is you really only need to have a bias or an edge for that, 5% of knowing what the market actually wants to do. Everything else is complete noise. Our job is not to try to figure out what the market is doing. The market's going to do whatever it wants to do, but more so to understand and align ourselves when it is telling us in some sort of clear bias or foundation. And most traders kind of overcomplicate this process because they try to, number one, either include multiple strategies and wait for this and then this and then this. And then a lot of the times they'll end up missing the setup because they're over and analyzing on it. So in this video, we want to cover kind of all this stuff, my main approach, how I view the market when I come to sit down in the morning, how I actually look for trades in the process of it all. The main thing that I want you to understand about daily bias and taking high probability trades is the difference between being an observer of the market and predicting the market. Like I said, our job is not to try to predict what the market wants to do or try to understand it 24/7, but simply react to the moments in which we can recognize what it is doing. Without further ado, let's jump right into the charts. All right, so what I'm going to do is I'm going to scrunch the chart up and I'm going to pick a random point in price action. And I'm going to basically run you through what my bias is on a day like this. So first thing I want to do is a complete top-down analysis, right? The main thing that I want to focus on when I'm trying to understand daily bias is where is the draw on liquidity? Where does the daily candle want to expand to? Now, for us to get a good understanding of what that is, we have to understand why the market moves, right? There's 4 reasons why the markets move: hunt liquidity, rebalance to inefficiencies, generate liquidity, and rebalance to equilibrium. So when I'm looking at this time frame, I want to go to the weekly and see if there's maybe some sort of like weekly fair value gap. Okay, so perfect, right? So there is a weekly fair value gap here. So there's a weekly bearish fair value gap that we're starting to come back into. This is where I would build my bias off of. So when just looking at price action and I can say, okay, where is the market drawing to? Well, so far below us, there is some sell side liquidity resting down here that we could possibly end up going to. There's some relative equal lows down here, but really what I'm looking for is not necessarily like where is the big draw in the bigger time frame, but where are we that I can expect to see a rejection or some sort of rebalance. Like, so when I look at this price action, I can say, okay, we're in a weekly fair value gap. We've been generating all of this internal liquidity down here. So I'm going to mark out this as sell side liquidity. When I look to the left of us, there's not any clear liquidity, but we are in an imbalance, right? We're in a weekly fair value gap. So that's where I'm looking to see a rejection. So then I look to the 4-hour, right? This is the 4-hour time frame. Now, what needs to happen for me to be bearish? Because it's not necessarily about having a bias. It's knowing is when is the market actually going to do what I want it to do or I'm expecting it to do. And that's where I'm looking for manipulation. So because we're in this weekly fair value gap, I would want to see a high get taken, right? And then us displace back lower. So kind of looking at where we are, I'm going to actually mark out New York open and we'll kind of skip to this opening bell for the next day. My bias is bearish. We're in a weekly fair value gap. I want to see us reject it, but now I'm waiting for internal price action to align with that bias. All right, so I've marked out 9:30 a.m. What I'm going to do is I zoom into the 15-minute and I'm going to do the exact same thing. Mark out my buy side. Where could we potentially end up drawing to? I would want to see us move higher first, take some sort of buy side to then look to see if we want to sell back off. So here we go. Market opens. We did exactly what I wanted to, right? So let's zoom out here. Let's figure out our bias. In the weekly fair value gap, we are now taking internal buy side at open. I want to see this become manipulation, right? Buy side's taken, which means I want to see a sell back to sell side, and we're in a weekly fair value gap. So when I zoom in, I want to wait for a change in the state. So when I look at the 15-minute, there isn't necessarily a change in the state yet. We haven't gotten below a series of down close candles. We've just taken buy side. So we have gotten below the 5-minute change. So I would want to see if we do want to continue to reject this or not. But I would be looking for price to start falling back to the downside. This is where I would also look for SMTs. So market ends up coming again. We take the recent high. This is where I would want this to be kind of like an internal manipulation and start to sell off from here. So this is a possible early short entry. I would be probably looking to take most likely a short here to fall back down into the range. Where would I want to see price draw to? The recent sell side level. So this is the recent sell side level. Now on the bigger time frame, this is where the change in the state would be, right? If we look at the bigger time frame and say what's going to validate a move lower, I would want to see a down close candle on the bigger time frame, right? So if I'm in a weekly fair value gap and I want the draw on liquidity to be here, I need the market to validate that's what we want to do. I am not trying to predict it, saying, hey, we're in a weekly fair value gap, we're going to reject it and immediately start selling back off. I need to see the market actually affirm this bias. And the way in which I need to see this affirm this bias is a break of structure to the downside on the bigger time frame. So right now, we haven't done so, right? When we look at the lower time frame, it's still not enough for me to take a trade yet. It might be a little bit early, but the bigger time frame hasn't validated the draw. So let's see what price does. So we actually end up moving higher again. So right now there still would really be no trade for me. This is going against my bias. I would still want to see price action continue to build. So we're continuing to build. Now we've kind of started to rebalance a little bit. It's a little bit later in the day though. We have no bigger time frame change in the state. So I would still be most likely watching price action here. Would still be watching. Again, so far this day, I would not be looking to take a trade because it's against my bias. Buy side got taken. We failed to have a change. We moved higher. No edge for me. So I'd continue to watch this and we'd kind of go into the next day. So let's skip ahead. And my bias would still be the same. Again, we're in the weekly fair value gap, but like I said earlier, it doesn't matter if we're necessarily in a bearish imbalance on the bigger time frame. What matters is when is the market going to be bearish? Because the problem that I see is many of you guys will be like, oh, we're in a weekly fair value gap. I'm going to immediately look for shorts as much as I can, and then the market runs higher on a day like this. So let's mark out the next 9:30 open. So again, I need to see a close below a series of down close candles on the 1 hour bigger time frame. So later in the day, we end up selling off and we have this 4-hour change. So this is a bigger time frame confirmation that I want to see us go back to these previous lows. So I might not have been able to catch this sell-off on this day, but now going into the next day, the bigger time frame has affirmed to me that we are in a bearish bias. So let's go into the next 9:30 open. Okay, before we get into this next day, let's take into account the new data, right? Bias is still the same. Bigger time frame, we've rejected the weekly imbalance. Order flow on the bigger time frame has been very, very bearish as well, so I want to see a continuation. Now that price has rebalanced higher, I want to see price continue lower. So now that we've had this 4-hour change, what am I looking for? What's here? There's a 4-hour bearish fair value gap. So once I have an idea, again, right, I'm bearish. What am I looking for? Manipulation higher first. So market opens, we rebalance back higher into the 4-hour fair value gap. We take out buy side. And again, what am I looking for? I'm looking for a change in the state to the downside, which is a break below a series of down close candles. So I'm looking on the 5-minute. I would continue to watch price action. I'm watching. Boom, right here. We close below the 5-minute change in the state. This is where I look to take a short entry. Now this, I ended up skipping ahead. Normally I would take it on the break and I would put my stop at the recent high. So once we close below this down close candle on the 5-minute, I put my stop at the high and I'm looking for a continuation lower. Now, my first PT would most likely be this internal low. And again, zoom back out here of what the reasoning for this bias is. Bigger time frames, very, very bearish. We've had a change. We've had internal manipulation of the buy side. This is where I'd be looking to take a short. See how this would play out. And first PT would get hit here. So we're aligning the bigger time frame, looking for an area of a point of rejection, some sort of manipulation. And what I want you guys to understand is for the market to go lower, we must go higher first. So any trade that you guys see me take, I need to have some sort of high or low get taken in the opposing direction. So notice here, I'm bearish on the day. But what am I waiting for? A move higher. So market opens, we move higher to rebalance to the inefficiency that we're looking to reject. We take out buy side. Then we have one last move higher. We close below the 5-minute change. We come back up, rebalance to it, reject it. And then we end up having sell side of the curve to go take these internal lows. And then this is where I would let my runners go and just see if we want to follow through. Might move my stop to break even. And I would let the rest of the contracts kind of do its thing here. And we'll kind of see how this plays out. So we continue to sell off. We'll kind of zoom out here so we can get a faster move here. And there we go. We end up selling straight to those lows. So again, using the bigger time frame to get a bias, rejection of the weekly fair value gap, change in the state. I then look for a move in the opposing direction, right? So because we've had this 4-hour change the day previously, we then open up a 4-hour fair value gap because of this big displacement leg. And because now I'm bearish, wanting to target these relative equal lows, I wait for manipulation internally higher first before then selling off to go take these internal lows. And then that's where I look to take my short. So now let's say that like, boom, this trade's over, great trade. Now what do we do? Sell side just got taken. What's the next thing, right? So now that sell side's taken, I want to see what the reaction is because I could possibly expect us to now get bought up back inside of the range now that sell side is taken. But I need to see more price action get put in. So this is where I zoom back out and I let kind of price action do its thing. We want to see us continue to build and then have an initial change to the upside as well. So boom, here we go. Let's go into the next day. All right, so market opens, we end up selling off. At this point in time, I would still be watching. I would still have a bullish bias. I want to start to see us move higher, but I need to see a reason for it. So this is kind of where I would start to look right here as we've had a low now get taken. So for me to take a long, we have a fair value gap here. I'd want to see this get ran through to the upside, and I would want to see a change in the state. Again, series of down closed candles get closed above, and this is kind of where I would be looking to take a long. So boom, we close above the change, fair value gap gets ran through. And another thing, this is straight sauce. Highly recommend if you're listening to this. There's an indicator called ICT everything. And I use this to look at Asia session and the standard deviation and midnight open. So this is extra confluence for me. Look at where Asia session is and look at this red line. This red line right here is midnight open. So if we displace away from midnight open and it's in favor of what I want to see my bias, right? Which is I would want to start to see us move back higher. This is where everybody's still super, super bearish. But what am I recognizing? We're generating liquidity all morning. Asia session high has not been taken. This is high probability liquidity. We have generated equal highs here. This is where I want to see the market come back to. So now, because we're down below this, I'm looking for a reversal pattern. What's the reversal pattern? Internal manipulation, low gets taken, fair value gap gets ran through, change in the state. This is where I would look to long. My stop loss would be at the low, and I would be targeting back towards Asia session. So take a long, low, stop at the low, targeting back towards midnight open and Asia session highs. And let's see how this would play out. And there we go. So we go back to Asia session highs here. So market opens, we displace lower, again, right, against the bias. For me to be bullish, I need to see the market go lower first. We go lower first, then have our reversal pattern. Internal low gets taken, fair value gap gets ran through, bullish change in the state, and we have, again, what's the reason for price to move? There needs to be a reason for price to move. The reason for price to move is all of this generated buy-side liquidity, right? At the morning, we pull away from midnight open. We then have our reversal pattern and we go back to take the generated liquidity that we initially had. Now, this is where fractal price is important because now that we've had this internal move, what is also happening here? We're now having a 30-minute change in the state. So this internal model has played out, right? The model that we just took to this long to go take buy side has now played out. But now I can also expect to see a continuation through this and go higher, because now if I take this off and we kind of look at this for what it is, this is now a 30-minute change to the upside. So this could also be a potential long on the bigger time frame, because I would expect to see a continuation through this. So let's see how this plays out now. I would expect, again, where? First, new week opening gap, and most likely probably a follow through it. And there we go, right? We come back, hold the change in the state, and then displace through this as well. So that's possibly another opportunity for this day. But let's continue to watch this, and then let's go into the next day one more time as well and use the same bias. Okay, so we're going to do basically this exact same analysis, right? When we zoom back out and we look at the bigger time frame, and we can say, okay, where are we? We just took sell side liquidity. We're starting to displace back inside the range. I want to zoom in. Is there any sort of, bullish imbalances that we can look to hold, right? We're still kind of holding this weekly opening gap. We've had a change in the state. I would still most likely expect us to go higher here, but I would want to see, again, we're about to open. What do I need to see for me to be bullish? Internal manipulation. So we've had this change in the state. What happens most likely afterwards? What have we, when I look at this and I can say, okay, I'm bullish. I want to see the market go higher. Market's about to open. Where can I expect to see manipulation? Where can I expect to see manipulation? I'm drawing sell side, right? This low that we put in is the internal low after this displacement leg. So this move is displacement, right? We are displacing from the low, going through the change in the state, have an initial pullback, generate sell side liquidity, move back higher, take the generated buy side liquidity. So I would want the market to do what? At open, I would want to see us manipulate, go take this low, and then get bought up and continue. So what is it doing here? What's the logic behind this? We're generating liquidity sell side to go stop out all the initial long traders, which is going to put their stops at these lows, go take out that low, and then continue towards the draw. That's what my bias would be. So let's see how this plays out. We're going to go into open, and we'll see if this gets a trade. Now, if the market just pumps, there's no trade for me, and I'm fine with that, right? You don't have to catch every single move or know what the market's going to do every single day, right? Only if my edge is present. In high probability, I need to see manipulation first. So let's see what happens here. Market opens. I would still be watching. Maybe there's honestly maybe a short setup, but I'll most likely be waiting for the move first. So boom, here we go. Market sells off, takes the low. What am I looking for? Change in the state. Boom, right here, 1 minute, bang. Series of down close candles, change in the state. This is my long. I take a long, and I put my stop at the low. So again, before we even see how this plays out, let's talk about why I entered this. Bias on the day is bullish. We've had our bigger time frame change in the state. We have a lot of room back to equilibrium of this bigger time frame range, right? Massive move. We have a lot of room to the upside. So now I've gotten my change in the state, sell side taken, and I'm looking to go what? Back to the generated liquidity here and the generated liquidity here. So we've had our change in the state. We've had our internal manipulation. Again, the market has moved lower now for the market to move higher. So I enter long, and let's see how this plays out. And boom, we go right back to all of the generated liquidity that we just put in. So the main foundation of what I want to use to take trades in high probability trades is have an understanding of, number one, where the market is drawing to. Now notice, when I'm explaining this, I'm not like extremely definite of like, oh, this fair value gap here, and this is what I'm looking for, and why this is this. I'm looking at this range, and I can easily just say, hey, sell side's taken. I know that the market rebalances back to equilibrium. We are very, very far away from equilibrium of this entire bigger time frame price range. And when I look in, I can also say, hey, we've had a 30-minute change to the upside. So I would want to see price go higher. For me to see price go higher, I want to see price manipulate lower, take sell side liquidity. So what do I notice? Sell side liquidity resting here. Market opens, we sell off, take sell side liquidity. Then I look for a change in the state. Then I enter long to target my bias. Now, the reason in which I see a lot of traders fail is they'll have most of the time the right bias, but they'll get stopped on a move like this because they're more focused on their bias than waiting for the market to show them when it actually wants to play out. And that's what being an observer is all about, is waiting and being reactive to manipulation and showing us when should I enter. I should only enter after I know most of the traders that are initially long have gotten stopped out. And A lot of the time that comes from waiting for manipulation. And what is manipulation? Liquidity sweep in the opposing direction of the draw. So if my draw on liquidity is bullish and I want to see us rebalance higher, I want to see the market sell off at open, take sell side liquidity, then start to move higher. And that's when I'm looking for my longs. I'm only looking for my longs or my bias after some sort of manipulation. That is what you need to wait for. My biggest piece of advice, and something that I always say, you will be the most successful as a trader when you feel like you're doing the least amount of work. Because a lot of the times when I first started trading, I did not trade like this. I would be more focused on my bias and be like, oh, I'm so bullish. This looks so clear. Long, stopped out, long, stopped out, long, stopped out. And then, oh, I'm done. And then when the model actually does present itself, I don't have the conviction or the capital to enter it. So the reason why it feels effortless is because you want to wait for the market to tell you when to enter. The market tells me when to enter. Again, my job is not to predict, but to observe and wait. Now, I should have a loose understanding. Like I said, I'm bullish. I want to see sell side get taken, but only when that gets taken am I entering a trade. If the market was just to open and we pump and we do not take this low, there's no trade for me. And I'm completely fine with that. I wake up tomorrow and I look for the exact same thing. And another thing that you should understand is not every level and not every fair value gap or everything that you're looking for actually matter. The main thing that you want to understand is price action, manipulation, and what the draw on liquidity is, right? That's all you need. Where is liquidity resting? Where are we going to on the bigger time frame? Where can I expect to see manipulation, right? Where's the liquidity in the opposing direction of the draw? In this case, I'm bullish. The opposing direction is bearish. So where's sell side liquidity resting? Wait for that sell side liquidity to be taken, and then look for a long in the opposing direction towards your draw on liquidity on the bigger time frame. Here's another, just drawing this out an example, right? If this is buy side liquidity, I want to see the market move lower, have some sort of manipulation, then a change in the state to take a long, right? So I want to see a low get taken internally, and then a change in the state, and then this is where I would be looking to take a long here to target the opposing liquidity pool. Now, if the bias in the direction is not clear, then you just don't do anything. You wait for it to be clear. Like I said, don't try to figure out what the market is doing 24/7. You are not paid for your time as a trader. You're paid for your decision making. And as soon as you wait and you actually treat it like that, why would you put investments or put capital on the table for something that you don't have conviction in, or the model or the market isn't showing validation for it? Now, if you're watching this video and you're still like, Justin, I don't understand this, I'm still kind of lost, this is what I want you to do. Is the next week, I want you to just focus on recognizing and asking yourself, when you look at the market going into the morning, where can I expect to see manipulation, and where can I possibly expect to see the external draw be, right? Is the bigger time frame bullish? Is the bigger time frame bearish? Is there an imbalance I can expect to draw to? Is there a low or a high I can expect to draw to? Once you have that idea, then ask yourself, where would I expect to see manipulation? So if I'm bearish on the bigger time frame, I want to wait for the market to go higher first at open, take some sort of buy side liquidity, look for SMTs, and then wait for a break to the downside to target whatever the opposing draw is. That is it. That is all I want you to focus on. And the more that you focus on that, you'll start to recognize that when the market's bullish, we'll go lower first, then go bullish. If the market's bearish, I want to see us go higher first, then go bearish. Look, I just showed you the exact process I use every single morning, and I couldn't get more simple than this. 15 minutes, that's all it takes to get a crystal clear bias. Most traders will spend hours on analysis and still be confused. You now have a system that cuts through all of the noise and gives you exactly what you need, which is clarity. Here's what I want you to do. Tomorrow morning, before you look at anything else, follow the steps that I showed you. Go on the bigger time frame, zoom in, ask yourself where the draw on liquidity is, wait for manipulation. Now, this process is just one piece of becoming an actual consistent, profitable trader. If you're serious about taking your trading to the next level and you want to work directly with me to build a complete system around your psychology, risk management, and strategy, I have a few spots open currently for my mentorship. If you're interested, there's a link in the description to book a free 15 to 30 minute call. I only do a few of these each month. So if you're serious about your trading, grab a spot while they're still available. Remember, the goal is not to be right every single move. The goal is to be prepared for what the market gives you and shows you. This process gets you prepared. Thanks for watching. Comment, subscribe, all that good stuff, and I will see you guys in the next video. Peace out.